Tempus AI believes they can leverage artificial intelligence to transform healthcare. One interesting buyer from earlier this year was Congresswoman Nancy Pelosi, who bought a sizable call option stake. So that's effectively a levered bet on Tempest shares. I did a prior video walking you through sort of the Tempest business model and Nancy Pelosi's purchase. However, just earlier today, Spruce Point, a noted short seller, came out with a strong sell on the stock, suggesting 50 to 60% downside risk. This caused the stock to fall significantly, down around 18% today. In this video, I'm going to walk you through, is there a smoking gun that warrants the stock falling further, or is this potentially the bottom? What are my thoughts on Tempest? And what is Spruce Point saying? Personally, I do not think that there is a smoking gun in their report. However, they do provide a mosaic of data points that I think is worthwhile for an investor to digest before they consider Tempest for their own investment journey. I do not own any shares in Tempest, but I love it when I see short seller reports on companies that I own, because it forces me to say, hey, is this the worst that you can do? And it sort of steelmans the argument, because if you have a short seller come out with a report and you go, wow, this isn't that bad. I mean, you're trying to cause the stock to go down, and this is it. Then you go, maybe I want to double down. And I've even did a video on that. Longtime, viewers on Unrivaled will know. You can leave a comment below if you know which video I'm talking about. But so let's go through this. Let's go through the mosaic that Spruce Point, calls out, as along with some of the recent developments with Tempus AI that I think does get investors excited, particularly around they're looking to build the most cutting edge AI model that will deal with oncology. And so look, if you're able to build an AI that can help radically improve cancer outcomes, that could be huge for humanity. That is sort of I'd argue, one of the bull arguments. So let's go through the thesis. Let's go through the data points. Let's go through what Spruce Point has to call out. So first of all, when we're thinking about the thesis, one of the things I look for whenever I invest in a company, once again, I don't own any shares in Tempest, but I'm looking at this. I want to have my, open mind, eyes open, is I like to find management alignment. And in this case, at a high level, you'd think that there is strong management alignment, because you have Eric Lefkofsky, who, he's the 10% plus owner. He's the founder, co-founder, CEO. He has a stake, tens of millions of shares worth around $2 billion around the current share price. So at initial responses, yeah, that seems like a heck of a lot of alignment. However, he has been rapidly dumping stock, literally hundreds of millions of dollars worth of stock, in the last few months. So that, look, that always gives me pause. I'd rather see someone, aggressively buying, with the fundamentals support it. But one of the points that Spruce Point made, which is kind of interesting, is this actually isn't one of their first short reports on a company that Eric has been, running or he co-founded. He previously co-founded Inner Workings, and Spruce Point's predecessor did a short report in April 2013, and subsequently Inner Workings had some, accounting misstatements, and ultimately the stock lost about 92% of its value at a max decline from the report. It then did, get some, recovery and was and the company was purchased. But, this does call out that Spruce Point actually does have a track record looking at what Eric Lefkowski has done and saying, yeah, some of these companies may not be so great. And yeah, he's an entrepreneur, Eric Lefkowski. I'm just going to call him Eric for the sake of this video, for a little bit of a mouthful in terms of the last name. But, so you not only have Inner Workings, which had a, fairly significant drop, 90%, from the time of the report to the absolute bottom. But one of his first ventures was during the dot-com boom, where clearly took advantage of the times, sold his company Starbelly, which, later went bankrupt, from the acquirer. The acquirer effectively, overpaid for this asset. And, that's one example of, I would say, shareholder value destruction over time. Another example is Groupon, where he was one of the co-founders. He talked about how Groupon is going to be wildly profitable, still hasn't hit that. And then Groupon had to restate their revenue. And yes, yet again, you have a stock that lost a lot of its value. So you might just say, well, this is a guy that's, been unlucky with some of his past ventures. Will that happen to Tempest as well? Well, looking at Tempest, looking at their genomics, their oncology business, you can see the number of oncology tests, have been growing very nicely from 40,000 to nearly 300,000 in the last year, continues to grow nicely, and the pricing per test continues to improve. This, in my opinion, these types of numbers are hard to fake. And I don't think they are making this stuff up. I don't think he has the incentive to make this up. You look at the revenue, you could see, revenue has also scaled nicely from 300 million a couple of years ago to around 700 million, predominantly in genomics. Their testing business, but they also have a sizable data and services segment. And you can see how the company has gone from significantly unprofitable on an EBITDA basis to nearly break even during the first quarter. And they're guiding for continued strong growth this year, 80% revenue growth this year. And they're expecting for the full year to be positive EBITDA, which would be quite an improvement to around 5 million positive EBITDA. We'll see. We'll see what happens. There's a lot of moving pieces. They made an acquisition for Ambry Genetics. So let's see how this all plays out. What concerns me, however, is that despite this sort of favorable trends and talking about EBITDA getting to close to break even, this is still a company with huge cash burn. Just in the first quarter alone, their cash burn was in excess of $100 million. That is not a clean or comfortable rate of cash burn. You can't sustain that for a long period of time. So them getting to EBITDA positive can happen soon enough. And I'm very curious if their working capital is also favorable, because it's interesting that their accounts receivable, effectively, they generated a lot of sales, but their accounts receivable also went up significantly, which, could cause short sellers to say, I wonder what's going on here. What's also a little surprising is that to finance this cash burn, they've had to, issue some debt along with their acquisitions of Ambry. And part of this debt has this weird covenant that says they have to maintain minimum revenues of $1 billion to 1.2 or 1.1 billion through the end of 2026. So this does reflect, a little bit of blow-up risk that investors should be aware of, which is that if there is any misstatement where they say, yeah, look, management's saying they're expecting to do over 1.2 billion in revenue, so that shouldn't be any issue. But if for any reason, unexpected, you're unlucky, and your revenue has to be misstated, or there's some sort of issue, and it actually dips below that $1 billion, you could have a financial breach with the debt holders, and they could say, hey, we want to get repaid back entirely, and I doubt that they would have the capital to do it. So that is a sort of big risk to think about. Maybe not big risk, but it's a blow-up risk to be mindful of. Maybe it doesn't necessarily happen, but it is. You don't see this oftentimes with companies, that type of very specific financial covenant. Sometimes you see, billions of dollars being raised in debt and effectively no financial covenants. The other key aspect that I think frankly got investors excited about Tempest was the announcement that they have this partnership with AstraZeneca and Pathos. We're going to be talking about this Pathos dynamic towards the end of this video. But this development, I think, got investors really excited because they talked about, this was just a few weeks ago, the development of the largest multimodal foundation model, so the largest AI model, artificial intelligence, in oncology. And this is a multi-year strategic collaboration with AstraZeneca. This is a big name. This is one of the big pharmaceutical companies in the world. And this agreement includes $200 million in data licensing and model development fees to Tempest. So at face value, this looks quite compelling, just like seeing a founder that owns billions of dollars of stock. I mean, the initial smell test is, hey, that looks good. Similarly, when you announce a $200 million data and licensing, that's going to be a high margin type of business. That's going to be a high margin, very profitable type of product. And it sounds like they're developing it. Maybe that means they own it. We're going to talk about all these aspects in the future, towards the end of this video. But the initial response is, this is great. Building the largest multimodal model on oncology, maybe that's what could help cure various different types of cancers. And the CEO, Eric, he added in the shareholder letter, I told our team this is probably the most important deal I have ever personally worked on. This is the most important thing he's ever worked on, not just as it relates to its impact on Tempest and our business, but also for its impact on patients. Foundation models and generative AI more broadly have the potential to make precision medicine a reality. We are closer than ever to understanding at a molecular level why patients do and don't respond to cancer treatments. As AI brings the picture into clearer focus, I can see a day when our diagnostics are so smart they ensure that every patient is on the optimal therapeutic path and that every drug company is efficiently designing trials that have a much higher likelihood of success. You could see why this potential, tackling oncology, cancer, AI model that could be super smart with helping come up with the better treatments. You could see why this, smells of transformative for society and potentially very lucrative. This seems very compelling at face value. So let's do a little bit of deeper thoughts. But first, as always, this is not financial advice. Also, earlier this week, Kieran D., a member of the Unrivaled Investing community, shared the following. He wrote, "Gave this service a try and was very impressed. Been investing 5 years now and haven't found anything comparable to what you're providing." This follows Doug S., another premium member, saying, "I've been a member only 3 months and I am overwhelmed by how good your service is. Your average cost on some of the top holdings are several times lower than the current price." So if you're looking for compelling ideas, come check out Unrivaled Investing. The price for the premium tier, the price for subscription is going up at the end of this month. So now is the time to lock in the favorable rates. Rates will never be lower than they currently are. So prices are going higher. When I look at AI, when I look at healthcare, I am very excited about the potential. And that's clearly what Tempest is looking to do, leveraging data, genomics, and various different applications to help revolutionize healthcare. That's one of their key, aspects. And look, I'm a huge fan of AI. I mean, I also have I'm an entrepreneur as well, where we have flash.stocksentinel.ai. I'm the co-founder, and that's leveraging AI where you could look up stock reports on any company in the world. And, and for this next month, we're trying it out that you can get any report on any company in the world for free. So any company that's already there, that's already free. And, if you're interested in, adding reports, that's also free to ask. So come check it out. That's flash.stocksentinel.ai. This is leveraging AI to research companies. So I am a big believer in AI, but my concern is when someone's just trying to take advantage of the times. Arguably, he did that. Arguably Eric, capitalized on the hype during the .com era and, sold that company, which later, went bankrupt, and maybe he did the same here with Tempest, because previously it was Tempest Labs and then they renamed prior to the IPO to Tempus AI to sort of get, tap into that AI excitement. But they acknowledge themselves, look, this is really a genomics business. If you look at, our actual AI application revenue, it's immaterial. It's under, it's 12 million out of 681 million. It's under 2% of our revenue. If you look up, what they say on their quarterly basis, they literally call out it's immaterial. Our AI business is immaterial. So for an AI company to literally have AI in your name, Tempus AI, and for that revenue driver to be immaterial, well, that might be it might be positioning to tap into the hype, or it might be this is where we are now, but in the future, we really want to be, that heavy duty AI company, which is, what they're arguably working towards. You can see this is from the quarterly report. Immaterial. The part that concerns me, so the AI part, that's something to be aware of. The business is evolving over time. One of the things that bothered me was that, so Lifkowski, Mike Wazowski, also serves as co-founder and executive chairman of Pathos AI. That was one of the partners previously, with this big oncology model, $200 million deal. And Pathos is an AI-enabled drug development company. And so I'm wondering, if Eric, why is he involved with Pathos if Tempest is such a big opportunity? Most CEOs are not Elon Musk. They can't successfully navigate, a bunch of different companies. You'd be lucky as a shareholder to have a CEO that's like, this is my baby and I'm going to grow it by 10x and this is all I'm focused on. That would be a great accomplishment. But when you have a CEO that's been with several, or founder that's been with several companies and those companies haven't worked out well for shareholders in several cases, I think it is worth going, okay, well, are you at least focused now 100% on Tempest? And the answer is no. He's, the co-founder of Pathos. And, if you go through the financials, Pathos will be the one responsible for the foundational model. And it sounds like they will own the model, this AI model that we were just talking about. However, the company will license to Pathos a comprehensive, data set. And that's why Pathos will pay the company license fees of $200 million over 3 years. So this bothers me because Pathos seems like they will own the AI. Maybe I'm wrong, but that's at least this language makes me think that. And, I'm also thinking like, wait a second. Eric has been dumping hundreds of millions of dollars of Tempest stock, and this is something Spruce Point called out. Is it possible that he's selling his Tempest shares, reinvesting that capital in Pathos, and using that to sort of prop up Pathos, and Pathos is then, creating revenue for Tempest with a $200 million deal? So that's very tricky. And it bothers me to see that sort of, shells that are being moved around. Not necessarily smoking gun, but you could see how this could create problems, I hope. And looking at this, even if the opportunity for Tempest is huge, even if the opportunity in AI and healthcare is huge, which I believe it is, given the history of shareholder value destruction, financial misstatements, and potential self-dealing, you've seen Groupon inner working stock fall significantly. I personally want to see Tempest, I think, generating real free cash flow, positive free cash flow, before I consider buying for myself. And even then, I would need to get a little bit more comfortable with the management alignment. Maybe I would prefer to even see Eric buying some stock. And so I think looking at the dynamics here at Tempest, there's a lot of excitement around AI. I clearly think it's going to be revolutionary, and it's going to impact every aspect of society, and it can't impact healthcare soon enough. I wish the revolution would happen tomorrow. Like, I'm very excited about improving healthcare outcomes, not only in the US, but around the world. That's a goal, aspiration. I hope Tempest works on making that possible. From an investment perspective, it concerns me to see such a high level of cash burn, history of being with companies that had aggressive financial statements and misstatements. Then you have financial covenant that says, hey, if there is some sort of misstatement and revenue doesn't stay above this level, then we could effectively say you need to repay our debt immediately. That's a sort of aspect is bothersome. And then you see this deal that's potentially self-dealing of Pathos, yes, paying a licensing fee, but Eric also owns Pathos. And, you sort of, well, why can't shareholders benefit? And if Eric thinks the value's with Pathos, wouldn't it be better? Yes, so Tempest owns like a 15% stake in Pathos or options. It's just, I don't like these different shells personally as I'm thinking about this. And so, looking at this, if the runway and the opportunity is so big, which I believe it is. I mean, we're talking about, U.S. healthcare is like 20% of the U.S. economy. This is a multi-trillion-dollar opportunity. If it really is, and Tempest is the pioneer that's going to create that opportunity, I think you're talking about a multi-decade runway in front of you. So part of my view looking at this is, why not wait for the thesis to risk off a bit, where you're generating that positive free cash flow, you have a greater sort of clarity on management alignment, not necessarily just bailing out on the stock, not investing the proceeds possibly into a product that gets the IP, getting a little more certainty that, the value is going to accrue to shareholders, unlike in some of these past instances where clearly there was shareholder value destruction. So once again, Spruce Point's report, I don't think has that smoking gun, but I do think it does provide this mosaic that should cause investors to at least be aware of some of the past instances where the founder of Tempest was involved with companies that ultimately lost shareholders' money, and to think about, well, what happened there and why is Tempest going to be different? I hope this video walking through Tempest, I don't have any, position in Tempest, not long, certainly not short, but think about, could this be a bottom? If you keep burning lots of free cash flow, and that 100 million, that's not sustainable. So if they don't improve it and they don't deliver on, effectively what they're suggesting, then I'd argue you'd have a lot more downside. But if you do, prove out, we can be free cash flow positive, and we can keep growing at an incredible clip, then yes, even though this company literally has a $9 billion, or around a $9 billion market cap, and is burning lots of, cash flow, arguably it could be worth a lot more in the future, but it would require that execution. And it would require proving, yeah, we've not only have the growth, but we've got the free cash flow to prove it. So I'm personally waiting. And as I've indicated, if it's a multi-decade story transforming healthcare, there could be a time in the future where they've shown, hey, we've de-risked. We've got this free cash flow, we've got this obvious growth, and we've squared away any sort of uncertainty you have about management alignment. I hope this video has been helpful. Thanks so much for watching Unrivaled Investing.